You'll hear more about all of them as the day goes on. At a macro level, commercial property prices have continued to increase. The Green Street Commercial Property Price Index is at 93% of its August 2007 high, and this has been reflected and then some in the REIT world. Apartment and mall REITs have seen the highest percentage increase over the past 12 months. Retail REITs have seen increasing sales and declining cap rates over the past 2 years. Equity returns for retail, residential, and healthcare all outperformed the NAREIT index in 2011. And as our next speaker will attest, the storage sector has been particularly strong. Total equity returns in 2011 exceeded all other REIT sectors. REIT M&A has continued to pace with a comeback over the past 2 years. A strong 2011 headlined by Prologis and Ventas with a hat trick for the year. We'll hear more about that from Debbie Cafaro later today. For what we're seeing, 2012 looks like another interesting year, headlined by Simon's landmark Klépierre deal in Europe, and perhaps a signpost on the beginning of a wave of global consolidation by the largest and most successful REITs. As Steve Roth recently observed, the cost of money is critical to success in real estate. Debt in reasonable moderation is available, and stock sales are a strong currency for strategic deals. The equity markets are strong. So let me just mention a couple of factors that we think will be hallmarks for REIT M&A in 2012. Strong balance sheets and cash positions, scarcity of new development opportunities, availability of credit and strategic debt positions, and continuing globalization. A couple of other statistics to give you a picture of the REIT industry, which is quite interesting, I think. At the end of 2006, there were 183 REITs with a total market cap of $438 billion. By the end of 2008, that number, both of those numbers have been decimated, with 136 REITs left standing, with a total market cap reduced by more than half to $192 billion. As of the end of Q1 2012, the number of REITs has increased modestly to 152, and the market cap has roared back to $528 billion. So although the Morgan Stanley REIT Index is still roughly 30% off its February 2007 high, what we've seen is a massive return of the REIT sector, and perhaps the beginning with a reduction in the number of REITs of Sam Zell's long-standing prediction that there'll be a nationwide and perhaps a worldwide consolidation in the REIT world. Debt is perhaps higher than Mike Kirby would like, at 55% overall to the public equity of the REIT sector. 45 REITs, which represent 63%. So again, you can see the consolidation at the top end in many ways. 63% market cap of the REIT world is investment grade. 16 REITs are in the S&P 500, and Simon is in the S&P 100.